Bismillahirrahmanirrahim. Assalamu alaikum. I am Sayyid Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Intermediate Accounting, and the course code for this subject is BS 363. This is lecture number 22nd. The topic for today's discussion is royalty accounts, under which specifically we will deal with the lessee account and the accounting procedure for recording entries in the books of account of lessee. The outline of this lecture consists of the discussion about the royalty accounts and specifically the accounting treatment in the books of lessee. Since we have two parties involved in a lease agreement, one is known as lessor, who is the landlord. One party is a lessor, party A, who is also known as landlord, and the other one is the lessee, who is going to have a lease agreement with party A to utilize certain specific piece of land or assets for generation of revenue or profit. And by utilizing this resource or piece of land to extract minerals, party B has to pay certain amount of money as royalty fee to the owner of that land or the landlord. So how the party B records the accounting treatment in his books of account will be discussed in this lecture. So entries in the books of lessee: the lessor, who is known as landlord, is going to receive either the minimum rent or the agreed royalty, whichever is greater. Let's suppose the minimum rent is 10,000 to be paid out to the lessor each year by the lessee, then that is known as the minimum rent. However, the agreed royalty fee means that the lessee is going to use that piece of land for extracting the mineral like coal or oil. So therefore, the royalty fee has been decided between two parties at the rate of output units. Let's suppose if it is coal extraction, then on the basis of tonnage, the agreement may be signed between two parties. And let's suppose if in a 1 year, the party B has extracted 6,000 tons of coal from this piece of land, and the royalty fee is ₹2 per tonnage, then the overall royalty fee will be 12,000 to be paid out to the landlord at the end of first year. So this statement means that the lessor will receive either the 10,000 minimum rent or the royalty fee, whichever is greater. Now in this case, the royalty fee is greater than the minimum rent, so therefore the landlord will receive 12,000 rupees rather than to be paid 12,000 rupees rather than to be paid 10,000 minimum rent. However, in another case, if the tonnage usage would have been 4,000, then the royalty fee would come up to 8,000 rupees. In this case, the lessee has to pay this minimum rent to the lessor for using his piece of land for extracting the coal. So this is the mechanism, or this is the meaning of first statement or agreement. In the books of lessee, the royalty account is debited, since this is an expense account for the lessee, with the amount of royalty based on actual output, as we have explained in the previous example. The amount of short working is carried forward throughout the period during which such short working are recoverable according to the terms of lease. In order to have full grip and understanding of this lecture, I strongly urge you to listen to my previous lecture for the important concepts pertaining to the royalty accounts. The amount of short working which is irrecoverable, like the time has been lapsed and the lessee did not recover its short working by increasing the mineral extraction or increasing the output units, then the lessee has to written off this short working against the profit and loss account at the end of the year. So let's say we have basically three distinct stages for recording entries in the lessee's book of accounts. Stage number one is when the royalties are less than minimum rent. Like let's suppose minimum rent is 10,000, whereas the royalty in the first year come up with 8,000 or 7,000 or whatever the amount which is less than the minimum rent. Stage number two says when the royalties are more than the minimum rents and short workings have to be recouped by the lessee. Like royalties needs to be paid out to the landlord is, let's suppose, 12,000, and the minimum rent agreed upon in this lease agreement is rupees 10,000. So this is the stage 2, and how to record the accounting entry for this stage will be discussed. And the third stage is so long as short working account shows a debit balance, it is recoverable, since this short working account for lessee is temporary asset or account receivable which could be recouped later on in the upcoming years by the lessee. So it shows a debit balance and it is recoupable. It will be shown in the balance sheet. Otherwise, if the time has been lapsed, then in that case this short working needs to be written off against profit and loss account of the lessee. The emphasis of this lecture will be particularly on stage number 1, which is when the royalties are less than the minimum rent, and how to deal with the accounting entries for this stage. It has basically further 2 steps or 2 conditions. Number first is when the minimum rent account has to be maintained. Minimum rent account has to be maintained, and the second condition states when there is no minimum rent account. When the minimum rent account is not maintained. So under 2 different conditions, we shall discuss how to record journal entries in the books of lessees. This is stage number 1, and the condition number first A states that when the royalties are less than the minimum rent and the minimum rent is maintained. This is first condition. So under this condition, we assume that, let us assume a case in order to explain different accounting entries. Generally, we have to record 4 different types of entries for each royalty case or entry. When the minimum rent has to be maintained, we have 4 different entries. Let's discuss one by one these. Let us suppose that there is an agreement between a lessor party A and a lessee party B, and we are going to record the accounting entries in the books of account of lessee party B, and we assume that this lease agreement has between party A and B the minimum rent decided between 2 parties, that is party A and party B, is rupees 10,000. So in this case, minimum rent what the party B has to pay to the party A is rupees 10,000. Then what could be different kind of journal entries? Let's suppose 1 year has been completed for the amount due to the landlord. How to make this journal entry? You need to debit the dead or minimum rent account, since this is in the books of lessee. So therefore, this minimum or dead account, dead rent account is basically the expense account of the lessee. And when there is an increase in expenses of a company, we generally record it with debit entry. So therefore, we have to debit the dead or minimum rent account with the agreed upon minimum rent payable, which was 10,000. And the double entry accounting system oblige us or require us to make a credit entry as well. So therefore, the credit entry will be for the landlord account, And here the landlord account is basically a liability account of the lessee. And when there is increase in the liabilities, that is recorded as credits. So therefore we have credited rupees 10,000. So this is the first entry to record amount due to the landlord in the royalty accounts. And then we need to make write a short narration, that is being dead rent due to the landlord. The second entry is for appropriating the amounts payable to the landlord. Now, what are different kinds of amounts that should be paid out to the landlord? The first thing is royalty account. Once again, I am referring towards this lessee's account of books. So therefore, the royalty accounts from the perspective of lessee, which is party B in this case, and the party A is landlord, and this party is our lessor. However, the party B is known as lessee. So for party B, who is lessee, the royalty account is an expense account because it has to pay certain amount as royalty to the party A. So we are assuming that at the end of the year, party B has utilized the mine by 4,000 ton, and per tonnage royalty fee was rupees 2. So therefore the royalty fee come up at the end of the year is 8,000 rupees. In this case, the lessee is required to pay out 8,000 rupees as royalty fee, but then comes the minimum or dead rent in between what the amount should be paid to the lessor. And the minimum or dead rent was decided between lessor and lessee was 10,000 rupees. So therefore, this royalty fee will not be paid, rather the minimum rent shall be paid to the landlord. However, we need to divide to mention the royalty and short working account over here, since we have studied in the previous lecture that the difference between minimum rent and the royalty fee is known as the short working. So the short working difference between these two is rupees 2,000. So let's come back towards entry number 2. We have to debit the royalty accounts, which is expense account of the lessee, by 8,000. And then the short working account, which is a temporary asset account for the lessee. We can also mention account receivable for the sake of understanding that the short working account is the lessee's account receivable, which could be recoupable later on if the company has increased its output or production. So therefore, we have bifurcated the minimum or dead rent between the royalty fee, which is 8,000, since we have used only 4,000 tonnage of the coal extraction or mine, and the remaining are short working, which is the excess amount to the royalty, so that we are going to pay out rupees 10,000 as minimum or dead rent to the lessor. So this is the second entry for appropriating the amounts payable to the landlord. Let's come towards entry number 3, which is for the payment to the landlord. Now it's time to pay out the amount. Since we have agreed, we have also narration against each title with the royalty due for the years, with the excess payment, and with the minimum sum payable. However, let's come towards entry number 3, which is related with the time come when we are going to pay out this minimum rent of 10,000 to the party A by the party B, lessee. Here party B is known as lessee. So we have to debit the landlord account, which was the company's liability. We can also refer this liability in the entry number 1. Here we have credited our liability, and when the liability has been paid out in terms of cash, then it will be debited. So decrease in liability by 10,000. We have to record the landlord's account, which has been debited, and then to credit the cash account. The cash account of lessee is the asset account, and when there is decrease in asset, it is recorded as credit. and then give a short narration being the minimum rent paid to the landlord. So with the minimum rent was 10,000, therefore we have recorded that 10,000 has been paid out to the lessor. Here comes the last entry, entry number 4, for closing the royalty account. Since this royalty account from the perspective of lessee, which is party B, is actually an expense account, so therefore expenses have to be settled down against profit and loss statement. Therefore we are going to write off this royalty account. When there is decrease in royalty account, which is an expense account which has to be set against the profit and loss account, normally the profit and loss account balance is in credit. Therefore we have to give a debit entry to the profit and loss account by 8,000, and it will decrease the profit and loss, or we can say the net profit of the lessee or company, and then give a credit account so that the royalty may be written off or transfers to the profit and loss account. And then you can give a short narration at the end of this journal entry by being transferred. So this is all about the case number A under stage number 1, when the minimum or dead rent account has been maintained. Let's discuss the second case under stage number 1, which is when the royalty accounts or royalties are less than the minimum rent. However, the minimum rent account is not opened or maintained. It is quite possible that some lessees may not maintain the minimum or dead rent account. So how the entries will look like? This will basically merge the first two entries of stage 1 under condition A. Like these two entries, first and second, will be sum up with each other, and we have to avoid mentioning this dead rent or minimum rent in both entries. So we are not required to write down these entries since the company under stage first in condition B is not maintaining the dead or minimum rent account. So therefore we have crossed it with the red line. So the leftover accounts are landlord account, which is a liability account, and then royalty accounts and short working accounts shall be mentioned directly in the first entry. Let's have a look in the next slide. Here it is when the minimum or dead rent is not maintained. So therefore we have not written the minimum or dead rent in the first entry having debits and credit titles. So we can see that the direct royalty, which was 8,000, since the company B or the lessee has used 4,000 of tonnage of mineral, and the 1 ton fee for royalty fee for 1 ton extraction was 2, so therefore the total royalty fee was 8,000. So we have debited the royalties fee expense directly into the company's books, lessee's books of account by 8,000, and then has mentioned 2,000 as a short working account, which is with the excess of minimum rent, and the minimum rent was 10,000 and royalty fee was 8,000. So therefore the short working is 2,000, which is the difference between the minimum rent and the royalty fee. If we subtract both of these, we come up with 2,000 of short working. And then we have to directly credit the landlord's account, which is the liability account, so with the minimum rent payable. And as there is an agreement between party A and B that minimum rent shall be paid to the lessor will be 10,000 rupees. So we have done the same, and these values have been assumed by us in order to understand the scenario. The second entry will be for the payments to the landlord. It will be the carbon copy of the previous stage 1 condition A entry. Let's have a look. We can see that for the payment of landlord under stage 1 in case A, it is the carbon copy of the condition B when the minimum rent account is not maintained. We have to debit the landlord's account, which is a liability account, by 10,000, and then we have to credit the cash account. Since this is a payment entry to the landlord for the rent payment, we are utilizing the property of the landlord, and we have paid the royalty fee to the landlord in this entry. So for payment, we have to debit the landlord account. This is our liability, and when there is decrease in liability, it is recorded by debit, and the cash account has been credited since it is an asset account, and when there is decrease in asset, it is recorded by credit. Let's come towards the final third entry under stage 1 in the condition of B when the minimum rent account is not maintained. For closing the royalty accounts, we have to charge the royalty fee account against the profit and loss account. Once again, we have to debit the profit and loss account since the profit and loss account has generally a credit balance. So in order to decrease this credit balance, because we have paid the royalty, which is an expense of the lessee, so therefore it will reduce the overall profit and loss account of the company. This is the reason we have debited profit and loss account, and the royalty accounts will be credited against the profit and loss account. And then we can give a short narration, and we have to mention 8,000 and 8,000 because the royalty fee was 8,000, which needs to be written off or transferred to the profit and loss account, and the remaining amount which was paid in excess to the royalty fee was 2,000. Since this 2,000 is recoupable or recoverable from the lessor in later on in different years subsequently, like after second year, third year, fourth year, so it is flexible and depends upon the deal between the lessor, landlord, and the lessee. So therefore, we have not written off short working yet in this year. This is the way how we can write down the accounting entries in the books of accounts of lessee. Thank you very much for listening to this lecture. If you have any confusion or question, you feel free to ask your question on KCMS, or another way around, you can also email me on my official email. I'll be happy to answer your question. Good luck for the day. Allah Hafiz.